Can the big winners from the stay-at-home economy keep winning now that America's open for business? Consider the case of Chewy, the online pet supply retailer that we've supported since it came public. When we realized what we were in for in mid-March, Chewy stock caught fire, surging from $20 at the bottom to $51 as of today's close. At a time when you couldn't go out to buy pet food, Chewy became essential, and I bet they keep those customers because they have a terrific auto ship offering. Now, Chewy reported tonight delivering a terrific beat with higher than expected sales up 46% year over year, smaller than anticipated earnings loss, actually EBITDA positive, and robust guidance. It's even stronger than what the bulls were looking for, though the stock is up 77% for the year. So can this thing keep climbing? Let's dig deeper with Sumit Singh. He's the CEO of Chewy. Find out more about the quarter and where his business is headed. Mr. Singh, welcome back to Mad Money.
Hi, Jim. How are you? Nice to be here.
Well, I'm good, Sumit, because I'm looking at these numbers and I'm seeing a surprise. You're actually making money, which is something we don't expect from companies growing as rapidly as you are. And you gave us guidance, which is something that people have been reluctant to do this quarter. How are you capable of doing those things?
You know, Jim, it's nice to be here, first of all. Good to be talking to you. I think what we've shown is we're proving out that what we've believed is that our company and the service that we provide is resilient to economic trends. And the fact that, pet is an essential business and we're proud to be in this category, the fact that nearly 70% of our sales are driven by our auto ship program, the fact that we're data-driven, we understand our customers and the cohorts and the way that they'll behave, allows us to sort of say, you know what, I think we're reading the trends pretty accurately here. We believe there's an acceleration in online, and we believe we're here to stay and play. So that's how we're giving the guidance.
I just want to point out immediately, because I am a customer, you have 100 artists on your staff. And I think for those who've never used Chewy, they might be saying, why does he have artists on the staff?
The number, by the way, is over 1,000, Jim, across the country.
Wow.
We partner with over 1,000 artists across the country, and some of them are freelancers, and some of them are with our own staff. And we do that because we create pet portraits. And what we're doing there is, we believe in wowing customers, and we believe in bringing them surprise and delight. And one of the ways that we do that is by hand painting pets' pictures on canvas and sending it to you. And let me tell you this, when a pet portrait arrives at your doorstep unannounced, you can't buy these, you can't course us, and it's just our way of thanking you. And when they do, the joy that we find on our customers' faces, the dinner table conversations, the engagements, that's really the return for it. So we love doing it.
Well, I think that's because a lot of people have said to me, Jim, you use this Chewy, but Amazon can always undercut everybody. And I said, one, if you take a look at their actual pharmacy that they have, they're not being undercut. But two, they actually know more about my pets than the corner company that I used to use.
Yeah, so that's a very good point. So a couple of things going on there. So one, we believe that this category, Jim, is an emotive category. Pet parents, customers refer to themselves as pet parents. I've said that before numerous times. But with us, when we engage, we build trust. We build trust early on, and then we deploy mechanisms like the one that I just talked about, pet portraits, flowers sometimes when pets pass away, return policies where we ask customers to donate stuff to shelters, and we pick up the tab for that. These are mechanisms with which we build trust, and trust engenders long-term loyalty towards our brand. The other thing is, we've continued to dimensionalize our business. So you mentioned pharmacy. That's another complementarity that we've added to our previous portfolio of food and supplies. And customers love, when they get a variety of choices at the same platform.
The prices that you charge for pharmaceuticals are well below what we get elsewhere. Is it just something that you have the true price of and are not trying to mark up? Because it is stark to see how much, because remember, it's cash pay. It's a stark difference between how much you charge and how much we pay from the vet.
Yeah, so we're actually working with our suppliers and manufacturers to price what we believe is called minimum advertised pricing guidelines. So we're actually pricing at MAP, and we believe that everybody should have access to affordable prices. And in that way, it actually drives and encourages more and more U.S. pet households. Let me tell you this, Jim. More than, over a third of U.S. households today, they don't go to their vets or don't go to the vet at a required frequency or time. Why? Because they're afraid of the expenses. And this is one way that I think we can actually bring healthcare to the forefront and make it more affordable for pet parents to then go into vets for visits, and the whole kind of cycle completes and the loop closes for us.
Well, Sumit, let's talk about the current environment. My daughter went to get a foster cat. Why? Because of the pandemic. People feel alone. They feel sad. Pets change that. Those of us who love pets know what they can do in a time of great stress. Are you hearing from pet owners similarly, and are you seeing adoptions and shelters empty out, as I am, as people are just desperate for companionship inside?
We're absolutely seeing it. We're hearing it. Customers are engaging with our brand, and we hear that necessity for companionship now more than ever. And that's essentially, people now have more time. They're at home. They have the willingness to adopt or to foster and to bring these pets home. And you're seeing that effect essentially on the fosters and shelters. I mean, our data, and the data isn't very clear on this, but whatever we're tracking shows us that year over year, between March and April, 60% more pets were adopted or fostered than the previous year. That's a huge lift.
That is huge. Well, before we leave, I always have to ask this. I know PetSmart controls the direction of our business. PetSmart is a big position. I'm just reading from the filings. The stock is up so much. Is it natural to presume or realistic that maybe PetSmart wants to sell some stock?
BC Partners that owns the two portfolio companies and PetSmart, they've been responsible. The two companies have been responsible, governors of liquidating their position. And they've done it in a structured and measured manner. And we expect nothing different moving forward.
Well, it's hard to believe that there was a category that had not been so-called Amazon, that hadn't been one. I just got to congratulate you. And again, as a customer, it's quite exciting to see all the other Chewy boxes on the block. You see Amazon boxes and you see Chewy boxes, and you deserve it for the way that you treat our pets. Thank you so much to Sumit Singh, CEO of Chewy, with a blow-away number and a profit. Great to see you, sir.
Thank you. Thank you.
Guys, we've liked it from the day it came public. What can I say? It's still great. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.